Hey everyone, welcome to the KE Report, another daily editorial, this time chatting with Joel Elconin. Joel is the co-host of the PreMarket Prep show, also introducing a new service he has for all you active traders out there called the Stock Trader Network. That's where Joel and his co-hosts get on and share charts with you, answer your questions, talk about what they're trading. Joel, since this is such a new service that you are offering, please just give us a little bit of an overview of what the Stock Trader Network is all about.
Oh, thanks for having me, Corey, and great to be with you, Chad, as well. As many of you know, or if you don't know, we do the pre-market prep show. My partner, a fellow Canadian, Dennis Dick, for years. We have done 8 and 9, and we've been many years did that for Benzinga went independent in November. And we had a lot of requests for more coverage of the markets and only being on for 8 to 9. So basically, we have expanded our hours of market coverage all the way to 11 a.m. in the morning. We're working out the various hours during the day. Also, we are on in the afternoon to cover the close from 3 to 5. A lot of people like to follow that price action. Also, so you get a written wrap of the pre-market prep show. A lot of good tidbits in there if you don't get to listen to it. And then you get a daily wrap of the market. So we did a soft launch today, but you can get a week free trial over there at stocktradernetwork.com. Very excited about it. We've had a great turnout so far, and people wanted us to, talk about the markets and what we're doing, our strategies and our insights during the day. So they asked for it, we delivered.
Well, Joel, that's pretty cool, and we'll definitely check it out. And I hope people listening in click on the link and go check out the new Stock Trader Network. Let's talk about the markets. We're on Friday. We always look at Fridays as an important day, not just closing up the week, but interesting market action. Looks like the markets made a little bit of a comeback this week, Joel. How are you looking at the main indexes?
Oh man, we had a chance, and it just doesn't mean it won't happen on Monday. But we really were looking in the abyss this morning. You guys know my simple technical patterns of double bottoms and double tops and stuff. And we had a pair of lows from Monday and Tuesday that are substantially above the low of the move, at 55.91. I'm talking the June futures here. And sure enough, there was huge pressure on the market going into the open based on sell imbalances for the quad-witch expiration. So the futures were following the sell imbalances lower, and at the last second, literally with 2 seconds to go, they switched to buy imbalances. And so everyone that chased the market lower had to scramble, found support right at the area you did on Monday and Tuesday, and now you're 50 handles higher. So good stand for the market. All those put buyers and all those people that sold it in the hole. Well, the day's not over yet. It's being that area, those puts, people that were looking them to go into the money. Well, maybe not yet. Maybe for your indexes. So very interesting. We're just about flat on the week. A couple false rallies that I just don't like to see those kind of rallies and just give it all back. But the average daily range is coming in a little bit. So that means we are calming down a little bit. Maybe we have a little window here till April 2nd to see what actually happens on the tariffs. But right now, at this time, 112 Eastern, it looks like this week it could be a mild win for the Bulls.
So, Joel, considering just how quickly and severely the markets came down, pretty much 3 weeks gave up 10%, almost straight down. While there was some, I guess, daily wins there, again, it was down, down, down. Everyone got all nervous. Now that we have this rebound, it's not, at least early on, to the same degree. Does that matter to you at all that the sell off seems more extreme than at least a short term rebound?
I think what the dynamic here and it's being a trader investor, you have to adopt your trading style, your investing style to different events. And what was happening for the last couple of years in this raging bull market is you had these V bottoms. Like you had one day like to get out there and get it. Now, this is not, I mean, you did have the one spike lower, surrounded by a couple other lows, but it's just not like that bolt out of there. So it's different. The characteristics are a little bit different. I think when you come off all-time highs like you do, you got a nature of overhead supply in the market now. People that wish they would have got out at 6,000, now they're going to have to bring their offers down. And then I think I've talked about this dynamic before. You have all these shorter term to intermediate traders that weren't caught in this tumble. They're accumulating large positions. And do you think they care if, a stock goes back up to its all-time high? No. They're just buying large amounts of shares. They don't even care about gap fills. They are just, large positions. So there's quite a bit of overhead supply. I think another dynamic that I probably didn't take into consideration enough is a lot of people did not take profits on their portfolio at the end of 2024, right? Why pay Uncle Sam in April of 25 when you can pay him in April of 26? So you didn't see a ton of that selling pressure in January. You're thinking, hey, whatever. We're just going to keep ripping higher. You didn't get, you got the move in January, check back in February, late February. We all know what happened. So I'm not as bearish. What was that, a couple of weeks ago? You're like, don't buy the. I was very bearish. I would say I'm still bearish, but I'm neutral. And neutral bearish. The high for this week is super important. And we're good 70 handles away from that in the S&P. So in order for me to get like the bottom is in, long-term bottom, 10% dip, then we got to rally another 70 handles, which we all know this market can do in a heartbeat, and hold. On the downside, I'm just going to use this week's low and basis the June futures 56.50. That's got to hold. So my parameters are there, and as if you witness the trading action this week, we can go anywhere in between that 120-point range.
Well, Joel, I appreciate you breaking down some of the price targets you're looking at for support and resistance in the indexes. It was also interesting that we had another Fed week, so the FOMC meeting and then the Powell presser afterwards. Financial media always loves to come out and take a stance, but just curious, you debated this on your show. What was the takeaway from you and Dennis on this? Was this dovish? Was this hawkish? How are you looking at the Fed?
We're still arguing about it. I did not. He thought it was dovish. I thought that it was negative to hawkish. And the one thing that he said that I just can't get out of my head is he said he still sees rising inflation and he sees lower GDP. So when I went to school, that was called stagflation. Okay. It's not negative growth, so I guess maybe the truth would. So to me, and he didn't say rates are going up anytime soon. And I am not, like I said, I took economics pass fail at Michigan. I barely passed. So when you talk to me about the balance sheet and the runoff and this, it's like you're speaking Greek to me. I just don't think that I think stability in rates is the most important thing, not necessarily moving up and down. But I don't think, and definitely for me coming from that meeting, I don't think the next catalyst for the market is going to be lower rates. I think it's got to be stability in the geopolitical situation, clarity on the tariffs, and really clear economic policy coming from Washington.
Yeah, I think that's what we're all waiting for. We even heard other central banks saying that's the biggest problem is that central banks and I think investors are handcuffed because they don't have any geopolitical outlook or any outlook on tariffs, whether they're going to ramp up or slow down. The one thing that stood out to me was at least that balance sheet unwind slowing down. So, hey, that's just again the Fed, I think, further moving to the sideline. Joel, any stocks, any sectors that caught your eye that maybe are diverging a bit from the market, whether good or bad?
Well, I mean, mega cap tech just, that just hasn't been the place to be. One stock that I got my eye on, and we're going to see what's going to happen, is Meta. And what you saw in Meta is it go from 740.91 to 474.66. That's a pretty big tumble, right? They put in, just like the S&P, similar to the S&P, it put in a double bottom on Tuesday and Wednesday at 474, 66, and 77. Had a spirited day yesterday, but gave it all back. It's going against the tape today. So, for a swing trade, yeah, well, now you're 20 handles away from that low. But I think that's an important low in Meta. And then it's as far as, I guess if you're going to buy stock, it should be Berkshire Hathaway, because when the market goes up, it goes up. And when the market goes down, it goes down. I mean, it's already had an incredible run, but the resiliency in that is just unbelievable. Trade. Maybe it's because of that high cash position, but I'm not bottom picking. I'm not chasing on the downside. And I'm certainly don't chase stocks. Certainly, this is the kind of environment where if you want to be going in, you're looking at some long-term investments, maybe pick a level above that. Okay, well, if it gets here and holds here, then I want to get in, because, man, some stocks have just been absolutely decimated. I mean, you took a look at something like Abercrombie and Fitch. I mean, we're getting a lot of signs. I mean, this stock, Abercrombie and Fitch, hit $196.99 in May and made a low this month of 74.31. Deckers Outdoors, this stock in the end of January made an all-time high at 223.98. It's trading at 117. That's an uninitiated almost a 2-for-1 stock split. So certainly not adding to my portfolio here. And, I don't think we're out of the woods, but we definitely have some defined levels to trade around. And, maybe the market will have a little sigh of relief, something, we get a different outcome on April 2nd. But I'm still going to stick to the mantra that I did before, is that, and I get that feedback on this, tariffs aren't inflationary. Well, who the hell pays tariffs? It's the consumer, right? Prices will go up on maple syrup. I mean, there's just no doubt about it. And then you have, reduced government spending, right? That's recessionary. And then, and it hasn't really showed up in the job numbers yet, because we're still creating jobs, but you're losing a lot of not only government money and government spending, but government stimulus.
Well, Joel, that's an interesting recap. Abercrombie and Finch, I used to shop there in the 90s when I was in high school. I didn't even know they were still in business. But the point you made about Warren Buffett's company, Berkshire Hathaway, continuing to be strong is a sign that people are still defensive and going into the value sector, and it's still getting a bid. And he was probably right to move to cash when he did, as he normally is. That's why he's a billionaire, and most people aren't. But I want to bring up another big tech company, because you mentioned the tech stocks haven't been the place to be. Nvidia was the market darling last year and really the year before. It looks like to me, technically, Joel, it's putting in a pattern of lower highs and lower lows and just keeps trending downward. Now, they put out a lot of news this week to the market about what they're going to do and their strategy. How are you looking at a stock like Nvidia?
You definitely got a pattern of lower highs and lower lows, and it gets it pop. I mean, I'm just not a big believer. Oh, these conferences and what they say and what Jensen Huang, brilliant guy, brilliant company, did a lot. I think that it had a trading range from 120 to 140 for the longest time. If you look, I mean, of course, it traded different out of those parameters. But if you look at it from October all the way until March, 120 to 140, that was the range, whipping through it. And now, you've established a lower bar here at 105, and maybe the new range is going to be 105 to 125. But the company, I just can't tell you about, what the exact future of AI and stuff, but you can't grow when you're a smaller company. You can grow, and you can grow your earnings, and you can expand your multiple. But the bigger you get, the harder it is to keep up that kind of growth. And I think that's what investors are feeling right now. There's growth, there's good growth, but it's not the bang buster growth that it had before.
Yeah, so true, Joel. But you know what? That whole AI trade, since the DeepSeek news, has been a real question mark as to what's going to happen. But Nvidia is still very much a leader in the chip sector. So we'll see how that all plays out. To me, just seems like this is a perfect market to move into cash. get some interest on that cash that you have and ride out this storm, because then at least you're locking in some sort of gains. Joel, always great chatting with you. And everyone listening, click that link in the show notes. Go visit that Stock Trader Network. Either sign up and let us know what you think of Joel's new website. Joel, great chatting with you. Have a great weekend.
Okay, thank you.